Hey guys, welcome back. This is Jeb Smith, Coldwell Banker Residential Brokerage here in Huntington Beach, and today I'm going to talk about FHA loans, and more specifically FHA 203k loans, what they are, and some of the benefits of using an FHA 203k when buying a house. The benefits that you get, so on and so forth. So, what is an FHA 203k loan? So it is a loan that allows you to put minimal down, just like FHA, so you can do a minimum of 3.5% down. But the real benefit to a 203k loan is they allow you to finance the cost of any improvements that you're going to do to the property as part of the loan. So traditionally, when you buy a property, you put your down payment, you get a mortgage on the property, and then any improvements that you plan to do to the property after you close actually have to come from money out of your pocket. Whether you finance them through a credit card, get a separate loan, or what have you, you're actually paying for those costs separately, whereas an FHA 203k loan allows you to actually finance any improvements you're going to do to the property through the loan. Now, how this works is, when you buy a property and you use FHA 203k, you have to make it aware to the seller of the property that you're actually doing this type of financing, because traditionally speaking, it takes a little bit longer to get the financing on the property than a traditional FHA loan or a conventional loan or what have you. But when you're getting the loan, what happens is an appraiser comes out and appraises the property, and they give you, an as-is value and a subject-to value. So basically, they appraise it in the current condition that it's in, and then they take the improvements that you're going to do, and they come up with a subject-to value. So once you do those improvements to the property, then essentially this will be the value of the home. And now, how do they come up with those subject to improvements that you're going to do? The improvements that you're going to do have to be done through part of the due diligence on your side as the buyer when buying the property. So you actually have to go out to contractors and get bids on the improvements that you're going to do to the property, and then those are submitted along with the appraisal, or they're submitted to the appraiser, and then they're submitted along with everything to the lender, because the lender wants to see the improvements that are going to be made as well. Now, one of the things that has to be done is it has to be done by a licensed contractor. They have to have proper licensing, insurance, so on and so forth, and all that has to be provided. So you can't just say that you're going to use one of these guys and end up using someone else. It has to be on the up and up with regards to licensing and what have you. So you're going to get licensed contractors, and even if you are a contractor, my experience, they won't let you do your own work, so you have to find somebody else to provide bids that you can submit along. So what happens is the lender, once approved, they'll actually finance up to 110% of the subject to value on the property. So say, for example, you buy a house at $500,000, and hypothetically speaking, with all the improvements that you're going to do, the value of the property is going to be worth say $600,000, just for topic of conversation to make the numbers really easy. $600,000. Well, the bank will actually allow you to finance up to $660,000 on that particular property using an FHA 203k loan. And now, how it works is the contractors, as they do work, that money gets paid through the escrow account directly to those people. So the money isn't held by you. You're not in control of those additional funds to pay the contractors. It's actually paid from a separate party, and there are inspections along the way by a HUD inspector just to make sure that the work is done correctly, in good craftsmanship, so on and so forth. So, it can be a very good loan for the right buyer, right? If you don't have the funds to come out of pocket and you want to do a bunch of improvements to the property, it's the best way to get them done. Some of the downsides, though, are with FHA in general is that you have mortgage insurance premium that you're paying every month. So if, and it's not tax deductible, right? So, if you're in a position where you have cash on hand, I would always recommend to buy the property and do the work yourself versus financing it, even in this case, even with how cheap money is, because with the mortgage insurance premium that you're paying every month, a lot of times it doesn't make sense to do it, but each case is different. So, if you do have questions about FHA 203k loans, what have you, financing in general, feel free to reach out to me. I can definitely put you in touch with someone who can help you and assist any questions you have. And if you have questions about real estate, buying a property, investing in a property, what have you, feel free to give me a call. Would love the opportunity to talk to you in a little bit more detail and help guide you in the right direction. As always, I do appreciate you taking the time to watch. If you have questions, comment below, send them to me directly, and I look forward to speaking with you soon. Have a great day. Bye-bye.